If you just moved to the USA, or you are planning to move soon, I need you to stop whatever you're doing and listen carefully. Because one silent financial mistake destroys the future of thousands of immigrants every single year. And the worst part? Most people don't even realize it until the damage is already done. You can land in America with $10,000 in savings. You can have a strong job offer. You can be educated, responsible, and financially disciplined. You can be the kind of person who has never missed a payment in your life. And still, you can get rejected for an apartment, rejected for a phone contract, rejected for a credit card, rejected for car financing, rejected for simple banking services people born here take for granted. And when that happens, most immigrants ask the same question. How is this possible? I literally have money. The answer is simple. In America, money and trust are not the same thing. And if you are new here, the system does not care how financially responsible you were back home. Your foreign credit history? Usually invisible. Your financial reputation from your home country? Usually ignored. Your years of discipline? Often irrelevant. To the US financial system, you are starting from zero. Actually, sometimes worse than zero. Because when the system cannot see you, it treats you like a risk. This is called the credit invisibility trap. And trust me, this trap is one of the most dangerous financial problems immigrants face in 2026. But that is only the beginning. Right now, there is another fear spreading fast. People are asking, is my money actually safe in US banks? Can banks report my immigration status? Can government policy changes affect my account? Should I avoid banks completely? Should I keep cash at home? Should I trust digital banks? Should I be worried? And honestly, these are smart questions. Because financial safety is not just about making money, it is about protecting it, especially when you are building a life in a new country. Today, I'm going to break everything down in the simplest way possible. No complicated finance language, no boring textbook talk, just real guidance. The kind of advice I wish every immigrant heard before landing in America. We are going to talk about how bank accounts actually work in the US, how the credit score system secretly controls your life, why immigrants with real money still get rejected, the biggest mistakes students and newcomers make, how to protect your money legally and safely, and hidden strategies most people learn years too late. Because if you understand this early, you save money, you save stress, you save years of financial struggle, and sometimes you save your entire future. So let's begin with the first truth nobody explains properly. Opening a bank account does not mean the system trusts you. This is the first major misunderstanding, and it causes huge problems. People think, I open my bank account, I'm done, I'm financially set. No, not even close. Opening a bank account is like getting a house. Building credit is like building your reputation in the neighborhood. One gives you a place, the other gives you trust. And trust is what controls opportunity. In America, most people begin with two basic accounts, a checking account and a savings account. Let's make this simple. Your checking account is your daily life account. This is where your salary usually goes. This is where rent gets paid from. Your debit card is connected to this account. When you buy groceries, fuel, food, subscriptions, transport, internet, electricity, most of that comes from checking. Think of checking as your financial control center. It handles movement. Your savings account is different. This is your protection account, emergency money, future plans, travel money, backup money, unexpected medical bills, family emergencies, visa renewal costs, life surprises. That money usually sits in savings. It may earn a little interest, but honestly, the real value is security, not profit. Now here's where the confusion begins. Many immigrants think having money inside these accounts builds their credit score. It does not. Let me repeat that because it is important. Your checking account balance does not create your credit score. Your savings account does not create your credit score. Your cash does not create your credit score. Your credit score comes from one thing: how you handle borrowed money. That's it. The system asks one question. If we lend this person money, will they manage it responsibly? That answer becomes your score. Not your savings, not your income, not your confidence. Only your credit behavior. And this is where reality hits hard. Let me show you what this looks like in real life. Imagine this. You move to Florida. You have $15,000 saved. You worked hard for years to prepare. You find a decent job. You feel proud. You think the hardest part is over. Then you apply for an apartment. The landlord checks your credit report. Nothing. Blank. No score, no history, no proof. To them, you are not financially strong. You are financially unknown. And unknown feels dangerous. So they reject you. You feel shocked. Then you apply for a postpaid phone plan. Same problem. They ask for a huge deposit. You apply for a normal credit card. Rejected. You apply for car financing. Rejected again. Now frustration turns into panic. You start asking, am I being punished for being new? Not exactly. You are being judged by a system that only understands one language, credit history. And if you don't speak that language yet, life becomes expensive. Very expensive. This is why I call it the invisible wall. You don't see it before arrival. You only feel it after impact. And by then, stress is already high. Now let's talk about how to break through that wall, because yes, you can. And the earlier you start, the easier it becomes. Your goal is not just to have money. Your goal is to become visible. Visible to banks, visible to landlords, visible to lenders, visible to the system. And the easiest beginner tool for this is usually a secured credit card. Now please don't get scared by the word credit card. Used badly, yes, credit cards can become dangerous. Used correctly, they can become one of the smartest financial tools you own. A secured credit card works like this. You give the bank a deposit, maybe $300, maybe $500, sometimes $1,000. That deposit protects the bank. Then they give you a credit card with a spending limit based on that amount. So if you deposit $500, your card may have a $500 limit. Now you use that card for small, normal things: groceries, fuel, internet bill, phone bill, monthly subscriptions, simple, everyday expenses. Then every month you pay the balance back on time, fully, no excuses, no delay. That creates history. History creates trust. Trust creates score. Score creates approval. Approval creates freedom. That is the path. Simple. But most people damage that process because nobody teaches them the rules. Let's talk about those mistakes, because avoiding mistakes is often more important than finding shortcuts. Mistake number 1, using too much of your credit limit. This is extremely common. People think, if I use the full card and pay it back, that proves I'm strong. No, it often does the opposite. Banks look at something called credit utilization. This means, how much of your available credit are you using? If your limit is $500 and you keep spending $480 every month, lenders may see that as risky, even if you pay it, because it looks like you rely too heavily on credit. A safer strategy is keeping usage below 30%, even better, below 10%. So if your limit is $500, spending around $50 to $150 is much smarter. Small, controlled, predictable. That builds confidence, not panic spending. Mistake number 2, missing even one payment. People underestimate this all the time. They say, it's just one late payment. No. Sometimes one late payment can hurt months of progress, sometimes more. Payment history is one of the strongest parts of your credit score. You must protect it. Set reminders, use autopay, write it on paper, put alarms on your phone, do whatever works, but never casually miss payments, because the system remembers and it does not forget quickly. Mistake number 3, applying everywhere after one rejection. This happens all the time. Someone gets rejected for one card. They panic. Then they apply for 3 more. 2 store cards, phone financing, buy now, pay later, personal loans, anything. This creates too many hard inquiries, and lenders notice. Too many applications too fast makes you look desperate, even if you are not. It creates the wrong signal. Slow is smarter. One strong approval is better than 10 weak applications. Patience wins. Panic loses. Every time. Mistake number 4, ignoring your relationship with your bank. Most people only focus on the credit score number, but banks also look at behavior. Do your paychecks arrive regularly? Do you avoid overdrafts? Do you keep stable balances? Do you handle money responsibly? Do you show financial maturity? These things matter. Sometimes 2 people have similar scores, but one gets approved because the bank already trusts their behavior. Your banking relationship matters a lot, especially later when applying for better cards, loans, or even mortgages. Mistake number 5, thinking debit cards build credit. They do not. This surprises many students. Using your debit card responsibly is good for budgeting, but it does not create credit history, because debit uses your own money. Credit scoring watches borrowed money. Different system, different purpose. Understand that difference early. It saves years of confusion. Now let's talk about something bigger, something people are scared to ask. Is your money actually safe in US banks if you are an immigrant? This question has become huge in 2026, especially with immigration debates, political tension, and constant fear online. People are worried. Some people are withdrawing all their cash. Some people are avoiding banks completely. Some are trusting random advice from strangers online. Please do not do that. Let's separate fear from facts. Under current US law, banks are not generally required to track citizenship or immigration status for normal personal banking the way many people imagine. Yes, identification rules exist. Yes, banks must follow regulations. Yes, documentation matters. But there is a major difference between identity verification and immigration surveillance, and confusion between those two creates panic. There was discussion around stronger reporting requirements. There was a proposed executive order that would have pushed banks to collect and report immigration status more aggressively. That created huge concern. But major banks, Wall Street institutions, and community lenders pushed back strongly. They called it unworkable. As a result, the proposal was delayed. Important word, delayed, not canceled. That means the conversation still exists. The timeline changed. The goal did not fully disappear. So what should immigrants do? Simple. Do not panic. Do not disappear from the financial system. Do not trust fear more than facts. Instead, use legitimate, regulated banks. Keep your identification and address records updated. Maintain proper legal documents. Avoid suspicious money services promising shortcuts. And stop believing that keeping all your cash under your mattress is safer. Usually, it is not. Cash at home can be stolen, lost, destroyed, forgotten, unprotected. No insurance, no recovery, no proof. Protected banking is usually safer than emotional hiding. Smart protection beats fear, always. Now let me give you one of the most powerful hidden strategies beginners rarely hear about. Become an authorized user. This can be a game changer. If you have a trusted family member, maybe a spouse, sibling, or parent, with strong credit history, they may be able to add you to their credit card as an authorized user. That means their positive payment history may help your profile become visible faster. It can speed up your start, but please be careful. Only do this with someone truly responsible. If they have bad habits, late payments, or high debt, that can hurt you too. Trust matters. Choose wisely. Another hidden strategy. Ask whether your rent can help your credit. Most people never even think about this. Some landlords and rent reporting services send your rent payment history to credit bureaus. If yours does, that can help you build credit without extra debt. Imagine that. You are already paying rent. That same payment could help your score, but only if you ask. Most people never ask, and silence costs progress. There is another mistake I see constantly among international students: ignoring small monthly bills. Students think only big loans matter. No, small habits matter. Your phone bill, internet, utilities, streaming subscriptions, late fees, overdraft fees. These things create patterns. Financial discipline is not built with one big decision. It is built with repeated small decisions. That is where trust grows. Now let's talk about student banking specifically, because students face unique problems. Many international students arrive with limited income, no social security number yet, and no understanding of how the system works. This creates fear, and sometimes bad decisions. Some students start borrowing emotionally. They use credit cards for lifestyle, not strategy. Restaurants, shopping, impulse purchases, weekend spending. Then debt grows, stress grows, shame grows. This is dangerous. Credit cards are not income, they are tools. Never confuse the two. If you cannot pay the full amount comfortably, pause, because interest is expensive, very expensive, and beginner mistakes become long-term chains. I always tell students, use credit to build trust, not to buy a fake lifestyle. That sentence alone can save years of regret. Now let me quickly mention something important for people connected to both the US and the UK, because many immigrants move between both systems. And what works in one country does not always work in the other. In the UK, one of the most underrated financial tools is the electoral roll. Most immigrants ignore this. Huge mistake. Many UK lenders use electoral roll registration as part of identity verification and lending trust. If you are eligible and your name is missing, lenders may automatically decline you. No warning, no explanation, just rejection. That means one of the easiest credit improvements can be simple registration. Free, simple, powerful, and almost nobody talks about it. For money safety in the UK, there is another important fact. If your money is held in an authorized UK bank, the Financial Services Compensation Scheme protects up to £120,000 per depositor per institution as of December 2025. And this protection applies to residents and non-residents equally. That means your protection depends on the bank, not your passport. That is huge, because safety is about institution quality, not immigration status. Choose your bank like you choose your home, carefully, because both protect your future. Now let's talk about emotional money mistakes, because honestly, finance is rarely just math. It is emotion, fear, pride, pressure, comparison. And immigrants feel this deeply. You see other people succeeding. You feel pressure to look successful. Nice apartment, better car, expensive phone, designer clothes, perfect social media life. This pressure is dangerous because many people start borrowing to look stable instead of building stability. That creates fake success, and fake success creates real debt. Do not do this. Your goal is not to impress strangers. Your goal is peace. Your goal is safety. Your goal is freedom. Quiet financial discipline beats loud financial stress every single time. There is also family pressure, sending money home, supporting parents, helping siblings, managing expectations. This is real, and it matters. But please remember, you cannot build strong support from a weak foundation. Stability first, then support, not the other way around. Helping family is beautiful. Destroying yourself to do it is not. Balance matters. Now let's imagine your first 90 days in America done the smart way. Week 1. Open a proper checking and savings account with a trusted bank. Understand fees before signing anything. Ask questions. Never feel embarrassed. Week 2. Get your documents organized. Address proof, identification, social security number or ITIN if available, employment details, everything clean, everything ready. Week 3. Research beginner-friendly secured credit cards, not random offers, not emotional choices, smart choices. Week 4. Use the card for 1 or 2 normal expenses. Keep spending low, pay on time, build rhythm. Month 2. Track every payment. Avoid overdrafts. Learn your statements. Understand your habits. Month 3. Protect consistency. No panic applications. No unnecessary debt. No fake lifestyle spending. Just strong foundation. This is how adults win financially. Not fast, not flashy, consistent, calm, strategic. Because wealth is usually boring before it becomes beautiful. And beginners need to hear that. Now let me tell you something powerful. Most immigrants do not fail because they are bad with money. They fail because nobody explained the rules early enough. That's it. Nobody told them savings and credit are different. Nobody told them invisible credit can block housing. Nobody explained how one late payment can cost months. Nobody taught them that fear-based decisions destroy safety. Nobody explained the system. And when people don't understand the system, they blame themselves. Please don't do that. Confusion is not failure. But staying confused becomes expensive. Now you know better. And better knowledge creates better decisions. Let's make the final truth simple. Your first financial mission in America is not becoming rich. It is becoming trusted, visible, stable, predictable. Banking is not just money storage. It is reputation building. Credit is not just borrowing. It is access. And financial safety is not luck. It is structure. Open the right accounts. Start building credit early. Use secured cards wisely. Pay on time. Keep balances low. Avoid panic applications. Choose trusted banks. Protect your documents. Stay informed. Ignore fear-based noise. Build slowly. Build correctly. Because the first year matters. The habits you build now can shape the next 10 years. And once the system trusts you, life becomes easier. Rent approvals improve. Interest rates improve. Financing improves. Options improve. Stress decreases. Freedom increases. That is real wealth, not just money, peace. Because true financial success is not looking rich. It is sleeping peacefully. Knowing your money is protected. Knowing your future is growing. Knowing you are no longer invisible. That is the goal. And the best time to start? Not next year. Not after another rejection. Not after another mistake. Right now. Today. Because the sooner you become visible, the sooner your money becomes truly safe. And once that happens, you stop surviving in America and you finally start building your life. Thank you for spending your time with me today. I truly hope this video helped you understand how to protect your money, build your credit, and avoid the financial mistakes that trap so many immigrants in the USA. Remember, financial success does not happen by accident. It happens when you understand the system and make smart decisions early. Your journey may be new, but your future can be strong if you start the right way. Stay informed, stay financially smart, and never let confusion control your future. Until next time, take care of yourself, protect your money, and keep building the life you came here for. I'll see you in the next video.